My name is Gellért Menczel-Kiss and working as tax advisor and manager at the Austrian-based LeitnerLeitner company. And it's a great honor because we are now a long-time partner of the Miskolc University in the Hercule project in the different stages. And I really do hope, I have to add that I'm not an academic person, but I really do hope that our contribution might be interesting and useful for you all, and we can also contribute to the success of this event. So, as said, we are representing clients before the tax authorities, and this is why I would like to talk about the possibilities of self-disclosure tax authority audits in Hungary. So it's rather not the court proceeding, because we are not dealing with that. And in the morning, colleagues from public prosecutor's office and from the Hungarian tax authority already shared their impressions and ideas to this topic. So now I would like to focus from another perspective, which is a tax advisor who is representing client before the authorities. At the beginning of the presentation, I collected a few points about the past practice of the authorities, because it has changed recently really significantly to the advantages of taxpayers. And when I'm talking about the past, I mention like the past 5 years or even longer back to time, because that time the tax authority was so much focusing on administrative issues, tax penalties, and they were really imposing penalties and surcharges for really small mistakes committed by the taxpayer. So even it's not a criminal offense, they simply started to impose penalties for like a missing invoice or some minor mistakes in the invoicing, which was really unfavorable for the taxpayers. And the government and the legislation just realized that this is not the way how a tax authority should react and cooperate with taxpayers, because good taxpayers are on the same side as the tax authority. So it was also time to catch up and change this attitude of the tax authority. And as a tax advisor, I really have to say that both in court proceedings and tax authority investigations, we really see the improvement on the side of the tax authority, which means we are moving forward to a more customer-friendly and cooperative tax practice in Hungary. There are some recent developments in the tax matters, which means there are more and more information made available for the tax authority. And this allows them to make deeper investigations and more focused tax audits. Just a few overview and few sentences for your better understanding. What is required from a taxable person, from a taxpayer, in order to comply with the Hungarian tax rules and compliance rules. A few years ago, so-called EKR system has been introduced, which is linked to the road transportation of the goods. And this means that when goods are transported either at the level of the EU, so for intra-community transactions, and also for domestic Hungarian transportations, all the data of the transport has to be shared with the tax authority, which means they have immediate information: what is transported, what is the quantity, what is the value. And this method is really useful to reveal incorrect tax treatments. For example, if you think about chain transactions, which really much go into the court, this EKR road transportation report was really a helpful method to reveal these issues and to reveal potentially improper tax treatment, which means less cases were gone to the court because taxpayers could realize that they are doing something wrong thanks to this system. Then we have the so-called real-time data submission, which means that when an invoice is issued under a Hungarian tax ID number, the data of the invoice shall be immediately transmitted to the tax authority. And this means that they can collect data about the background of the transactions, and they know what is going on, what is invoiced, and of course they can double check it when this is represented in the tax return itself. Parallel to this real-time submission liability, we have a so-called itemized reporting and declaration of the invoices, which means that the recipient of the invoice shall provide detailed information to the tax authority about the invoice received. And this is a really good cross-checking possibility for the tax authority. And the next stage, which is applicable for the future only, the tax authority will get direct access to the accounting software of the companies, which means they can really check all the available financial data of taxpayers, not only at the time of publishing the financial statements, but even before. And I have to admit that tax authority is really working with a really good risk management system and artificial intelligence, and they are capable to collect data and start tax audits on a focused way. This means that as a really high volume of data is made available for the tax authority, they can react immediately to the daily business of the companies, because they have some cross checks, and when something is revealed and detected in these systems which were mentioned by me, they are able to step in and warn the taxpayers either for a possibly incorrect treatment, or they can immediately start tax audits, which means there are less and less chances for fraudulent events. And that's what we also experienced in the practice, that taxpayers are really following the rules, and because of the extensive data made available for a tax authority, it's getting more harder and harder to get into situations when it can be ended up at the court or with some criminal law proceedings. So the key and the attitude of the tax authority is now the tax collection and cooperation with taxpayers instead of imposing penalties more frequently. As a new approaching method of the tax authority is based on these data, the direct contacting of taxpayers. And we have experienced in the recent years that even without a tax audit and official starting of tax procedures, or later on court procedures, the tax authority is getting in touch with taxpayers, and they are simply calling the taxpayers to clarify some discrepancies, for example, based on the data submitted through the invoicing system to the tax authority, or if they see any doubtful or questionable transactions, for example, in the EKR road transport system, they are contacting the taxpayers and just simply asking them to give some additional information or to double check their methods and system, how they are reacting and how they behave. And I have to admit that this is definitely not a tax audit and not an official procedure. I would say rather it's like a friendly call or a kind of warning to double check if everything is going smoothly, or if there is a need to change something in the business processes. That's one improvement of the tax authority in the proceedings. And the other is the so-called warning letters, which means that prior to the start of official tax proceedings, the tax authority is circulating a kind of information letter, which only includes that there will be a tax audit shortly, and this grants some sufficient time for the taxable persons to get prepared for the tax authority audit. And if necessary, they can do a kind of self-disclosure, or just simply double check if their documentation or softwares are okay, and in a later step they will face with the tax authority audit on a well-prepared way. So in practice, it works in a way that everything is done electronically. So the communication with the authorities is 100% electronic, and there is a letter sent to the taxable persons. For example, in some clients, we receive such notification letters already in September that during the fourth quarter, a tax audit will start. And this means that taxable persons has 1, 2, or 3 months to get prepared for the tax authority audit. And in case some self-disclosure or corrections are needed, this is the time to do this, because according to the Hungarian rules, when a tax authority audit is started, there is no more chance to make any amendments or changes, especially for extended tax authority audits, because at the time the official starting letter is received, the taxable person has no right to make any tax assessment or any changes to priorly submitted tax returns. And as a consequence of the methods and tools introduced, as I already mentioned, there are increased number of self-disclosures and increased number of tax revenues, which is the most important from the tax authority. We are almost in a daily contact with some heads of the tax authority, and they are always pointing out that compared to the old approaches, the most important is to ensure the tax revenues and the proper tax payment instead of really making administrative burden and administrative sanctions and penalties against taxable person. So this is definitely a really customer-friendly attitude of the tax authority, which we really practice in our day-to-day business. In the next slide, you see the difference between the financial consequences of self-disclosure in Hungary and the financial consequences of the tax authority findings. And before going into details, I have to admit that the classic self-disclosure does not exist in taxation in Hungary, or at least at the level of the tax return and tax assessment. So like the instrument you have in the German law, the Selbstanzeige, that does not exist in Hungary because we have simply the so-called self-revision as an institute, which means if already a tax return is submitted, the taxable person has the right to correct the tax return without any notification or without any warning, and this is possible within the statutory limitation period. If this is happening and there is an additional tax payment, the only penalty or surcharge has to be paid is the so-called self-revision surcharge, which you see is at the moment equals to the Hungarian prime rate, which is 1.80%. So when it comes to self-disclosure or correction of previously submitted tax returns, we usually tell to the clients as a kind of joke that it's much cheaper than going to the bank and asking for a loan if tax has not been paid, because 1.8% is not a disaster if they have to pay when they reveal that something was done incorrectly in the past. So this is the situation when a tax return has been already submitted, and this is subject to changes. If there was no tax return at all in the past, but it turns out based on the processes or by involving a tax advisor that some step has to be done and tax returns for the past has to be submitted for the first time, there is the so-called late payment interest, which is payable, and this equals to the Hungarian prime rate plus 5%. And as you might see, this is also not a really huge penalty, let's say, compared to the tax authority findings. As regards the financial consequences of tax audits executed by the tax authority, if there is a tax shortage found out, there is a tax penalty of 50% of the tax not paid, which is significantly higher compared to the self-disclosure. Plus, in addition, of course, late payment interest has to be paid because of the late payment of taxes. And in addition, the tax authority also has the right to impose the so-called default penalty, which can be approximately 1,600 euros. And theoretically, it can be imposed as many times as many tax returns were missed or submitted with an incorrect data. So if the tax authority makes the findings, that can hurt because penalties are significantly higher. And that is the reason why also the tax authority and the legislator tries to force taxable persons to follow the rules and make self-disclosures instead of entering into tax authority proceedings and then later on court proceedings. A few words about the tax estimations, which is done by the tax authority. I have to add that this is really an extraordinary action in Hungary, and in practice, maybe we only have good clients, but I only faced with such situation only a few times in my practice when the tax authority really used the assessment, because that's definitely not the main rule that the tax or the tax base has to be estimated based on declarations or comparison of data available on the market. And there are really strict conditions to use the estimation by the tax authority, which means that fraudulent action shall be at least assumed by the taxable person. And it is really important that the estimation is not the way to to calculate or to pay the taxes, this is a kind of proving method, which means that when the tax authority makes the estimation, of course, it is possible to contribute it and to provide the sufficient documentation by the taxable persons. As some new elements of the tax proceedings, which also has a significant impact to later court proceedings, for example, is that a few years ago, the procedure rules has changed in Hungary, and as a really key change in the frame of a tax authority audit and later on court proceedings, if something was not opened or not disclosed and shared with the tax authority or later the court, there is a last minute when evidences and documents or declarations can be provided. This is when the taxable person is sending remarks to the tax authority for the protocol, so the minutes. So when the tax authority is performing a tax audit, as a first step, they will send the minutes or the protocol to the taxable person, which is legally not yet binding, but this is the last case when available documents and information shall be shared with the tax authority, because at a later step, it is not possible to present documents. This means that the playground, let's say, of the taxable persons is really much limited, because we also have some experiences from the past that taxable persons simply did not disclose everything and did not share all the documents with the tax authority. And suddenly, when they were in the court, they just quickly started to present the documents which were available for a really long time. And this was also a kind of playing with the time, especially because of the long tax authority audits and the long court proceedings, that after 4 years, taxable persons came and started to present brand new documents before the court. And then the legislator said, no, it's too late. There is no way. So if you want to present something and if you want to rely on your documents, you should present it already during the tax authority audit, even before the first instance decision of the tax authority. So it's a really crucial change, and taxable persons and authorities has to be aware of this, and they have to act accordingly, that they cannot present documents later or before the court in case these were already available at that time. Another important instrument, let's say, is a kind of agreement which results in reduced penalties. So when the tax authority is imposing penalty in its first instance decision, in case there is no appeal against the decision, it's possible to reduce the penalty with 50%. So it's really interesting and sometimes a tricky situation to consider whether there is a need, or if it's worth going forward, for example, to the second instance or to the court, risking the double of the penalty, or we should be satisfied with the 50% of the penalty imposed and say the procedure is stopped and there is no use to go further. It's in our experience, sometimes it's a really hard question to decide by taxable persons. What is more beneficial, or what can be better for a taxable person if they say they are not going further and they accept the penalty, but they cut the half of the penalty, or they say that we have right, let's go further, let's go to second instance, let's go to the court, but they are running the risk that if the second instance of the tax authority or at a later step the court confirms the findings of the tax authority, the higher penalties has to be paid. So it's a really interesting question, and in some cases it's a really a decision point whether to go forward or not. And at the end of the presentation, I would like to show you some, I gave the title as motivators, which are also some tools introduced by the legislator and the tax authority, that they make categorization of taxpayers as reliable, normal, and risky taxpayers. These instruments are laid down by the legislation. So briefly, I would say that reliable taxable person is the one who has no tax debts existing for at least 2 years, and there were no significant tax authority findings by them in the past. So this categorization is automatic by the tax authority, and in case a taxable person is qualified as reliable taxpayer, that's a really good business, I would say, and really huge advantages are connected to this qualification. For example, the tax audits are shorter, and these are maximized in 180 days instead of the regular 360 days. So, which means the tax authority really has to finish the tax audits until this objective deadline. Another crucial point here is that the potential penalties to be imposed by the tax authority are only 50% of the normal penalties if a taxable person is categorized as reliable taxpayer, which means instead of the normal 50% tax penalty, the maximum can be only 25%. And in addition, once a year, it's possible to ask from the tax authority for tax installment payments in 12 equal sections and 12 installments without any interest. And the VAT refund period for reliable taxable persons is 30 days instead of the normal 75 days, which means reliable taxable persons really get the VAT much faster than normal or risky taxable persons. So these are also instruments forcing taxpayers to follow the rules, not to commit any criminal actions or any transactions which are against the legislation, because they can lose really a lot. And my last slide is about the, let's say, sanctions or actions against the so-called risky taxpayers. Here, they have to count automatically with a longer VAT refund period. So instead of the 30 days, it's 75 days, which can be really harmful for the daily operation, that you make a VAT deduction and a VAT refund, and you have to wait almost like 3 months or 2.5 months to get your money back. And of course, tax audits are also longer, because with the normal 360 days, an additional 60 days can be given. And risky taxpayers has to face with much higher penalties, which are 150% of the normal penalties that can be imposed against them. And this is also with the higher late payment interest and higher tax penalties. So it's really a bad situation when some taxable person is categorized as risky, because they are more and more in the focus of the tax authority, and much frequent tax audits are executed against them. So basically, these were the latest news of Hungary. I know that this is not about the court procedure, but I really hope that this, I would call them like -1 step, or take a step behind before going to the court, and just to see the instruments which are introduced and used in Hungary in order really to force taxpayers to follow the rules and not to commit fraudulent events. So thank you very much for your attention, and I'm staying here until the end of the section. So I'm open to discussions, ideas, or any comments at the end. Thank you very much, and thank you, Judith.